Have you noticed massive movements in cryptocurrency markets recently? Crypto whales, individuals or entities holding enormous amounts of digital assets, are moving billions of dollars, and their actions could reshape the market in ways most retail investors can't even imagine. Today, we're breaking down who these whales are, what they're doing, and what their massive transactions mean for investors like you. We'll explore everything from on-chain tracking to psychological effects, coordinated whale strategies, and how DeFi is being influenced. Make sure to like this video, subscribe to our channel, and turn on notifications so you never miss crucial market insights. By the end of this video, you'll understand whale behavior, the strategies they use, the signs to watch, and how you can anticipate market shifts before they happen. 1. Who are crypto whales? Crypto whales are not just investors, they are market movers. These are individuals or institutions holding enormous quantities of digital assets, sometimes millions of dollars worth of Bitcoin, Ethereum, or other major cryptocurrencies. Their trades can influence market prices significantly due to the sheer volume they control. Unlike retail investors, whales often have access to private deals, OTC, over-the-counter trading, and early-stage projects that let them move large amounts without immediate market chaos. Some whales are early adopters of Bitcoin and Ethereum. Others are institutional funds, venture capitalists, or crypto hedge funds managing multi-billion-dollar portfolios. Whales often act strategically, taking advantage of dips, rallies, or microeconomic events. Even minor movements from these holders can spark massive reactions on social media, forums, and trading platforms. Understanding who they are is critical because their behavior often predicts market trends and helps retail investors avoid being caught off guard. 2. Whale wallets and on-chain tracking. Blockchain transparency is a double-edged sword. It allows anyone to see massive wallet movements while also letting whales operate anonymously. Large wallets and cold storage accounts reveal inflows, outflows, and transactions, which analysts use to detect potential market movements. Sudden transfers from cold wallets to exchanges often indicate an upcoming sell-off, while moving funds back to cold storage signals long-term holding. Platforms like Whale Alert track these transactions in real time, providing valuable clues. By observing transaction patterns, investors can spot potential market rallies or crashes before they happen. Whales also split holdings across multiple wallets to reduce attention, and they may use mixing services or decentralized protocols to disguise movements. Understanding these techniques helps analysts interpret signals accurately and avoid false alarms. 3. Massive buys and market signals. When whales buy in large quantities, it's often more than just speculation. It signals confidence in a coin's future. Large buy orders can create price floors, acting as support levels and encouraging smaller investors to enter. For example, during Bitcoin dips, whales accumulating coins quietly often perceive long-term bullish trends. Similarly, Ethereum whales increasing holdings before network upgrades, staking incentives, or major NFT launches can indicate rising demand. Retail investors who monitor these trends can align their positions with whale accumulation, often benefiting from subsequent price surges. 4. Sudden sales and market corrections. Whales also have the power to cause abrupt market corrections. The single large sell order, sometimes tens of thousands of Bitcoin or Ethereum, can trigger price dips, liquidate leveraged positions, and create panic among smaller traders. However, these sales are rarely random. Whales sell strategically, often during high liquidity periods or in coordination with news cycles, to avoid slippage and maximize profit. Understanding the timing and triggers behind whale sales is essential. Retail investors can use these insights to avoid losses, capitalize on short-term volatility, or even enter positions when whales temporarily depress prices. 5. Whale clusters and coordinated moves. Sometimes whale activity isn't isolated. Multiple large holders may act simultaneously, amplifying their market impact. These coordinated movements can signal upcoming major events like exchange listings, DeFi protocol launches, or high-profile partnerships. Clusters of whale movements often precede large rallies or consolidations. Analysts track these clusters to anticipate market trends, predicting whether prices will surge, dip, or remain stable. Understanding coordinated behavior can give investors a critical edge in timing buys and sells. 6. Influencing market psychology. Whales don't just move coins, they move minds. Their activity can spark fear, uncertainty, and doubt, FUD, or fear of missing out, FOMO, among retail investors. News coverage, social media chatter, and forum speculation amplify these effects, often creating self-fulfilling price moves. For instance, a whale transferring millions to an exchange may be interpreted as a crash signal, triggering panic selling, even if the whale's intention is portfolio rebalancing. Learning to interpret these psychological effects helps retail investors stay calm and make strategic moves rather than reacting impulsively. 7. Whale strategies. Accumulation vs. distribution. Whales typically operate in two strategic modes: accumulation and distribution. During accumulation, they quietly buy over time to increase their holdings without drawing attention. During distribution, they sell strategically to maximize returns without destabilizing the market. By observing these patterns, retail investors can anticipate market trends, avoid panic selling, and align their positions with long-term whale strategies. Accumulation periods often correspond with market dips, while distribution tends to coincide with peaks, providing key insights for timing trades. 8. DeFi and whale activity. Decentralized finance platforms are increasingly sensitive to whale activity. Large holders can manipulate liquidity pools, yield farming strategies, and lending protocols by moving significant capital in or out. This introduces opportunities for savvy retail investors, for example, temporarily higher yields or price swings, but also risks, as sudden whale moves can drain liquidity or crash token prices. Monitoring whale wallets alongside DeFi protocol metrics is essential for understanding market health and potential investment opportunities. 9. On-chain metrics that matter. Key metrics for tracking whales include exchange inflows and outflows, large wallet activity, concentration of holdings in top wallets, token accumulation during market dips, unusual transaction patterns or spikes. By monitoring these metrics, investors can detect early signals of market movements and position their portfolios advantageously before trends unfold. Combining these metrics with social sentiment and market news creates a comprehensive picture of whale behavior. 10. The future outlook. What whales might be planning. Current trends suggest whales are positioning for a highly volatile 2026. Accumulation in Bitcoin and Ethereum may indicate preparation for institutional adoption, macroeconomic events, or major technological upgrades. Some whales may also be diversifying into emerging altcoins, AI-driven crypto tokens, or new DeFi projects. Retail investors who track on-chain data, watch whale strategies, and anticipate movements will be better prepared to navigate price swings, capitalize on opportunities, and avoid being caught off guard by sudden market shocks. Understanding whale behavior is now a cornerstone of modern crypto strategy. Now you know why crypto whales are moving billions and how their strategies can influence markets, investors, and trends in 2026. From accumulation and distribution to coordinated moves, psychological influence, and DeFi activity, understanding whale behavior gives you a critical edge. If you found this video helpful, like it, subscribe, and hit the bell icon for more exclusive crypto insights. Comment below, which whale activity are you monitoring, and which coin do you think they're targeting next? Stay informed, stay strategic, and watch the whales move before the rest of the market does.